The Fed's favorite measure of inflation just jumped again. Pay attention. It's called the PCE, Personal Consumption Expenditures. That's the number the Fed actually watches and cares about, and it ticked higher in August. Headline PCE came in at 2.7%, and the core PCE, that's the one without food and energy, hit 2.9%. Both are still above the Fed's 2% target. That's why 10-year Treasury yields crept higher, but stayed under 420. Here's where it gets ridiculous. The biggest driver of that bump? Shelter costs. Not the actual rent anyone pays. The single largest driver was something called owner's equivalent rent. That's a made-up number, guys. They literally ask homeowners, what do you think your house would rent for? And then they put that fantasy into the inflation calculation as if it's real spending. Just owner's equivalent rent added 0.38% to this month's inflation reading. That's not data, that's fiction. And that fiction is what the Fed uses to decide how much to choke the economy. It's why mortgage rates have stayed higher than they should have been, punishing home buyers and slowing the housing market. Look, PCE rising is serious, but how can we claim to be data-driven when we're basing policy on imaginary rent payments? It's long past time to fix the way we measure shelter costs. The current method has distorted inflation readings for years, and families are paying the price. If you're looking to buy or refinance, don't be fooled by the headlines. Rates are still on a downward trend as the economy cools, but bad data like this has kept you locked out. Follow me to stay ahead of the noise, because somebody has to call this out for what it is. Fiction posing as economics.